Hey everyone, welcome back to the Living in Maryland channel where we discuss all things living here in the great state of Maryland. And today we are discussing the things that you need to know if you are considering purchasing a home here in the great state of Maryland in 2024. So we're gonna go over several things just so you kind of have an idea of what things you need to plan for, things to be aware of before you jump into this large purchase and process. So the first thing that I am always telling people is just to, at the very least, start kind of playing around with some mortgage calculators. If you're comfortable with taking even a step further than that, speaking to a lender and just getting an idea of what you qualify for based on a monthly payment that you are comfortable with. With, interest rates, still very elevated. Your typical conventional 30-year mortgage is still going for over 7% right now. It can be a little bit of a shock to some people when they actually start diving into what these payments look like, maybe at a purchase price that you are thinking you want to target. So really having that dialed in before looking at homes and kind of before getting too far into this process can be very helpful, so you can set realistic expectations on what you qualify for based on where you want to be monthly payment wise. And when it comes to interest rates can vary a lot based on consumer profile, based on credit, and a various amount of things. But just to give you a rough ballpark, based on a resource that I follow, it pulls from several banks around the country, you're looking at a 30-year conventional rate somewhere around 7.25% right now. Again, it can be a little more, can be a little less depending on consumer profile. And then you're looking at your government loans, which is FHA, VA, your veteran loans, somewhere around 6.875 on average based on this resource, again, that I follow. So again, it just to kind of get you in the ballpark, but interest rates still fairly elevated compared to where we were. It seems like we're getting further away from, that 3% range that we were, 2.5 years ago, but still a little bit of a culture shock to a lot of people that I talk to. So just kind of being aware of where those rates are at. They're moving around daily. There's a lot going on. So just kind of being aware of that can be helpful before and as you step into this process. Okay, second thing to be aware of is that the real estate market is still extremely competitive within Central Maryland. So this is something to be aware of, because once you start looking at homes and once you start wanting to put offers on homes, you don't want to be surprised at, maybe you find out there's 5 other offers, and it's like, that could be very shocking if you're not mentally prepared for that stepping into this process. So that is, multiple offers, competition, buyers bidding, competing. This is something that's still very much part of the Maryland real estate landscape right now. And it's something that I think is helpful for people to be aware of before they, start seriously looking. So now I want to jump into a few reasons. There's probably several and many more than this, but a few reasons as to why it is still so competitive out there. So first reason I want to talk about is just how Central Maryland is a lot of these neighborhoods, a lot of these zip codes are very established within their real estate market. So there's not a whole lot of, although there is some new construction and some building going on compared to a lot of, expanding and growing metros around the country. Central Maryland is not, we just can't, we don't have that same level of building. So the amount of new inventory coming to the market, we're not getting much help from there. So we are getting a little bit, but not nearly enough to kind of start shifting that inventory and start really seeing a noticeable difference. So we're still very much in an inventory crunch due to just lack of new inventory, new homes, actual physically new homes coming to the market. So the second thing is going to be just tied to how expensive it is. And this is something that, it's definitely partially my opinion, but also being talked about a lot out there in different news cycles and different resources and stuff like that. So we've got all-time real estate prices. I can't speak for other parts of the country, but in Central Maryland, we have all-time high real estate prices. So because of that, it is just that much more expensive for people to actually make these moves, whether they're upsizing. Well, a lot of people, when it comes to upsizing or making that lateral move, if it's something that they would absolutely love to do, but they don't absolutely have to do, that's going to be something that a lot of people are just they're thinking about it and they're just like, you know what, it's just too much, it's not worth it right now, let's just wait. So you have so many people on the sidelines that would love to move, but just cannot make sense of it financially. And it's just really, really, really keeping the number of homes coming onto the market low. So those are just a couple of reasons, and then when we talk about overall, all-time high prices and overall, it being expensive to purchase a home right now, the first one that we talked about is a major factor in that too, which is elevated higher interest rates. So, you've just got people looking at, maybe they get started in the process, looking to buy and then they've got one to sell, which would help, bring new homes to the market, but then they just, they just start going down that path. They start looking at what the monthly payment's going to be and what it's going to cost overall, the cash needed. And then for them to actually compete, they would need the cash from their existing home, and it's just to go contingent is non-existent in the market. So it's just continuing to just, push people to the sidelines. And that won't last forever, although it seems like it's going to last for a long time. That's not going to last forever. We just don't know how long it's going to last, and it's continuing to just keep that number of homes coming to the market very low. So there's just still continues to be many more willing and able buyers than willing and able sellers, and it's just creating that competition on the buy side, and it just seems to be hanging around for the time being. So something to be prepared for once you decide that you want to step into the real estate market. And real quick, before diving into the next item, just want to let everyone know that I am a licensed realtor here in the state of Maryland. If you ever have any real estate questions, if you are thinking about buying or selling a home, wondering if that might be the best move for you or the right move for you at this time or any time in the future, we would love to have a conversation with you and see how we can best assist. Feel free to reach out however you are most comfortable, and we would love to have a conversation about your real estate goals. So the next item here is kind of piggybacking off of the last item, which is how, as a buyer, if you are deciding or really seriously thinking about stepping into this real estate market, what are ways that you can be competitive? What are things that other buyers are doing so that you're aware of that up front? So first thing we want to look at is just being aware as a buyer that the list price is really just the starting asking price. It's possible that home sits and it maybe they do price drops and stuff like that. But for brand new homes on the market, it's also very possible that price bids up a little bit, whether it's 2, 5, +%. So just something to be aware of. Every zip code, every market within Central Maryland can be a little different when it comes to this. And it's also dependent on where the seller lists the home. So if they list it a little below market value, then it's just, it makes sense that that's going to keep coming up. So, or bid up once it goes active on the market. So just being aware of that there's still bidding, and just being aware that the list price is just the starting asking price, and then it might very well go up. So just being aware of that. Number 2 is when it comes to inspection. So we're still seeing a lot of buyers, in competition, or in competitive situations rather, they're starting to, kind of do less of these or not do any at all. So it's something that you want to be aware of. Now this is not every transaction. More times than not, a lot of buyers are saying, I want to reserve the right to inspect the home, and I want to reserve my right to back out if I find something, big or major, right? So I want to reserve those 2 items, but I will not ask for repairs. That cleans it up a little bit to the seller. Now the seller is like, okay, they're not going to ask for cosmetic things. They're not going to ask me for a long laundry list of repairs. So that's what we're seeing a lot of. In extreme cases, if there's like 3, 4, 5+ offers, it's still very possible that some buyers are just saying, you know what, I want to be as competitive as possible. I'm not even going to inspect this property, and they're just waiving those inspections altogether. So something to be aware of, that's still, at some points, at some times still existent in this market. Next would be asking the seller when they would like to close. What is their preferred close date? If the home is vacant, that seller is very likely going to want to close ASAP, as soon as possible. So asking them, and getting with your lender, hey, can I close in 21 days, 25 days, something quick to be competitive on those homes that are vacant. And then also if it's occupied, if you can tell the home's occupied, most sellers are going to expect to close somewhere in that 30-day range. And then also asking them if they need a rent back, and seeing if you can accommodate a specific convenient close date for the seller, and also any post-occupancy. This is where you close on the home as a buyer, you take ownership, and you're granting the seller to stay in the home for a negotiated amount of time, somewhere between 0 and 60 days post-closing. So this can help the seller make their next move and make that transition a little easier, thus making your offer a little more competitive. So that's something that we're still seeing as well. So just kind of asking them what their preference is, that can go a long way as well. And then last but not least, paying your own closing costs as a buyer can be very, very helpful in this market. So, certain homes that don't sell right away, it's possible to, get seller credits and help the buyer offset closing costs. But on those homes, I'm kind of really more speaking to those competitive situations where, it's that first weekend on the market type of thing. The open houses are flooded with people and they're getting multiple offers. In those kind of situations, paying your own closing costs is really a must. You're typically looking, somewhere around 4% of the sales price is a good estimate of what those closing costs are going to be. You can imagine if you've got a buyer not asking for anything from the seller, you've got a buyer asking for 10 grand from the seller, that it's something that the seller's looking at. It's affecting their bottom line. So if you can pay your own closing costs as a buyer in a competitive situation, it's going to go a long, long way. Okay, last but not least, as a home buyer stepping into this market in Central Maryland, what can I expect it to cost me? So I want to break that down for you real quick. I'm going to give you an example based on a $400,000 home. So on a $400,000 home, if you were going to go conventional, maybe you're a first-time home buyer, so you qualify for 3% down. 3% of $400,000 is $12,000. That's going to be your down payment. So $12,000 in form of your down payment. And then as I just mentioned in the last item, you can expect your closing costs to be somewhere around 4%. Now, if the home's newer, it could be a little more. It could be a hair less, but it probably not. So it's probably going to be right around that 4% mark, maybe a little more depending on the property. So 4% of the sales price of $400,000 is going to be $16,000. So 16 plus 12, you got $28,000. That's roughly what you can expect it to cost you total cash out of pocket to purchase a $400,000 home. Now, the only thing that you want to basically plan on in addition to that is the cost of your home inspections. Are you doing home inspections? Exactly. What are you inspecting for? And what's that going to look like? So like if you're buying a home with well and septic, you've got roughly $1,200 to inspect for the well and septic, plus probably about $500 for your general inspections of the actual, structure of the home. If there's no well and septic, it's on public utility, roughly $500 is going to get you a thorough, good home inspection. So you want to budget for that. But that is basically what you can expect. Now, the closing cost, $16,000, it's a lot of money. It's a lot of money. So what is that made up of? What exactly is that? I'm going to just break that down for you real quick. So part one is lender charges. So anytime you use financing to purchase a home, the lender's got to charge you something. Typically, they're going to charge you for like underwriting, processing, something like that, usually around $1,000 to $1,200, something like that. Next, you've got escrows. So whenever you are putting less than 20% down, the lender requires that you have an escrow account for the lender on your behalf to pay taxes and insurance once you close every single month. So you're going to park money every month from your monthly payment. It's going to stay in your escrow account, and then the bank's going to pay your taxes and your insurance for you. So in order for them to fund that escrow account, they've got to collect money from you at closing. So that is part of your closing costs. Next is title policies. So when you get a loan to purchase a home, the lender requires that you purchase them a lender insurance policy to protect them from any title issues that may arise post-closing. It's not common, but it's something that they require so everyone has protection. And then an owner's title policy is going to just protect you from the same thing. Any title defects, any issues that may pop up that can challenge your interest in the property post-closing, that policy will protect you for as long as you own the home. So those are your title policies. In Maryland, we have what's called transfer taxes. It is 2.5% total per transaction. Now, what happens typically is the buyer and the seller split that. So 1.25% to the buyer of the purchase price, 1.25% to the seller of the purchase price. That is part of closing costs. And then there's what's called where you're reimbursing the seller for any items. It's called prorations that they have prepaid in advance. So what's an example of that? Maybe they've prepaid the quarterly HOA. So if they've prepaid it for a month after you close on the home, you just have to reimburse them for that month from the day you close on the home until it's been paid, prepaid. Property taxes, it's very common. So if you were to close on a home in March, well, the taxes have been prepaid by the seller through the end of June. So you're gonna have to reimburse them from the day you close through the end of June since they've already paid that money. Those are called prorations. That is just kind of a rough idea of the kind of when you pack up and package up all of those fees, that long list of fees that you see when you buy a home. That's what's, what the closing costs are made up of. So if you ever have any real estate questions, if you need anything at all, please feel free to reach out and we will see you at the next video.